In such a volatile stock market, where do we put new investing dollars? Do we continue to dollar cost average into the things that we already own? Maybe. Or do we look for companies and commodities that might perform better in this environment? Probably. How long are we going to be in this economic desert? Are we headed into a recession? We just might be going nuclear. I'm Chase, and you've landed on the Moonshot Money channel. Are you ready? Let's go. This is certainly not investing advice. Please do your own due diligence and only invest in what you can afford to lose. First, let me say, we hope everyone enjoyed their holiday weekend from Good Friday and Passover to Easter Sunday. We certainly have a lot of reasons to celebrate. Okay, what's the first thing you learn in any economics class? Supply and demand, right? When supply is greater than demand, prices fall. When supplies are less than demand, prices rise. The world is moving towards a cleaner energy future, and nuclear power could play a key role in this energy transition. Nuclear power is not only carbon-free, it's also one of the most reliable and safe sources of energy. Countries all around the world are beginning to recognize these advantages, including Japan, where all 55 reactors were previously taken offline following the Fukushima accident. With more than 54 global reactors under construction and 100 reactors planned worldwide, the demand for uranium is set to move much higher. Uranium prices look set to climb even more, a Bank of America analyst said last Tuesday. Why? Listen up now. Per Business Insider, Russia will make up 17%, or an estimated 34 million pounds of total uranium supply for 2022. In terms of uranium conversion, the country accounts for around 20% of global capacity and 29% of estimated 2022 production. For enrichment, Russia accounts for 46% of global capacity. Big problem. Russia uranium imports made up about 16% of the American uranium supply of 2020. Rumors had begun to swirl in March about a potential ban of Russian uranium by way of executive action from President Biden, but that never materialized. Hey, if you like videos like this and this kind of information, make sure to follow us over on Twitter at Moonshot Money 1 for more real-time information. So, between crude oil, natural gas, heating oil, gasoline, propane, and uranium, only one of these have seen larger price increases than uranium in the last 12 months. Only natural gas, at 183% 12-month price increase, beats uranium's price increase of 117% over 12 months. But get this, uranium has gone up over 45% since the beginning of March. Are there any correlations you can think of? The Russian-Ukraine war is the catalyst. We believe utility companies in the United States and around the world are beginning to shift their focus on uranium supply from Russia to other sources. Have we missed the big run? Probably. Is there room for any more uranium and uranium mining companies to move higher? We think so, and we are buying some mining companies. Let's talk about one in particular. Cameco Corp, ticker symbol CCJ. We've been buying shares of Cameco since last week. Cameco Corporation is the world's largest publicly traded uranium company. Bank of America analyst Lawson Winder reiterated his buy rating for Cameco and has raised his price target from $32 to $37 a share. As of this filming, the price is around $30 a share, and Cameco also received a key upgrade from RBC analyst Andrew Wong last week, revising his recommendation to buy from hold and setting a price target of $40 per share. Per Barron's, the ongoing Russia-Ukraine conflict was a key factor in Wong's upgrade. We believe the Russia-Ukraine war and subsequent shift in Western markets away from exposure to Russia have fundamentally changed the uranium market outlook and long-term market structure. On CNBC's Options Action, an advisor said that Cameco has seen persistently high options volumes, but even with that, last Tuesday's volume was double the average call volume. Calls outpaced puts by more than 13 to 1, he added. We are just building a case here for you to think about. Even Elon Musk got in on the action, believe it or not. In a thread of tweets in March, he even said that nuclear energy is far better for the environment than burning hydrocarbons and added that the threats of radiation are an exaggeration. Hopefully, it is now extremely obvious that Europe should restart dormant nuclear power stations and increase power output of existing ones. In full disclosure here, we have also been buying Rio Tinto and BHP, who also have significant stakes in the exploration and processing of uranium. So what do you think? Is there any room left for uranium and Cameco? Let us know in the comments below. Let us know what you're buying during these difficult times. Here's another investing opportunity that we've done well with over the past week. If you haven't seen this video, I'll see you over there. Have a great week, everyone.